Okay, so we have almost 90 people on the call, and hopefully people will join us as we get along. So thank you for joining us for the 6th webinar on navigating COVID-19, managing insurance coverage and claims for losses resulting from the pandemic. My name is Kenny Leon with the Canadian Construction Association. Unfortunately, for some strange reason, I show up as Nicole Emmett because we have somebody on the registration for the account, but here I am as Kenny. Before we begin, just a few webinar etiquettes. Please mute your audio. You already self-muted, so don't try to speak. It's not going to work. For questions, please use the questions box, what you see on your the GoToWebinar pop-up. You can ask them right throughout the presentation, except they will be answered at the end by the panelists. So you can still write the questions, type the questions, and we will answer them right at the end. Thank you. Needless to say, with project delays stemming from the pandemic, there will be insurance claims and, of course, losses. On the webinar today to discuss these and other things, we are delighted to have our panelists, Catherine DiMarco, partner, and Andrew Heal from Heal & Co. LLP, and Todd Gagnon, claims manager from BFL Canada. Over to you, all three of you, and thank you for presenting this webinar on behalf of CCA.
Okay, thanks, Kenny, and thanks everyone for joining us. Good afternoon and good morning to our friends on the West Coast. We're now accustomed to a new vernacular: social distancing, new normal, all these phrases we never used before, into a whole new way of doing things in our daily lives. And fortunately, it appears that infection rates are beginning to decrease. We're advised, and there's signs from provinces such as Quebec and Saskatchewan that they're getting ready to reopen. Todd, can you bring up the slide if you don't mind? And of course, there remains a tension between those whose priorities are to keep the economy going and those who want to extinguish the virus and not risk overwhelming our medical system. But in the business, insurance, and legal worlds, we're operating in the context of a lot of uncertainty. And we hope this afternoon to provide you with some practical advice for managing insurance claims arising from the COVID-19 pandemic. And so if, Todd, you could advance the slide, I'm going to turn the floor over to Andrew to outline certain types of construction risk.
Thanks very much, Kathy and Todd. I will be circling back to some of the themes that come out of the talk today, and certainly the first one that Kathy put in front of you is that the new normal is evolving very quickly. And in fact, contract, which is looking prospectively, deciding today how to order your affairs for tomorrow, the COVID-19 experience is certainly teaching us that not everything that we thought we'd allocated today for tomorrow is the case, and that things are developing in real time. But when you talk about construction contracts, you're talking generally about things like performance risk, which I think is the most important thing. That's performance of the contractor doing the work and its trades, it's performance of the owner paying for that work, and it's the performance professionals that monitor that in-place construction. Associated with that is the financial risk, and then the new normal now, there's a lot more financial risk for projects that are underway and dealing with the COVID-19 situation. You've got the property damage risk that is probably going to be allocated to some degree and insured against in your contract, and similarly personal injury risk. In the context of COVID-19, the new normal is, the first thing is project delays, with many construction companies receiving notices. Either they're receiving force majeure notices or giving the owners force majeure notices. This is leading to cost overruns. Those are head office overheads. They are site overheads that could lead to liens, bond claims, and then ultimately insolvencies. Right now, and in our office, we have a couple of workouts that are not quite in the insolvency situation, but certainly in the situation where liens have been registered or threatened, and owners are trying to work through, and performing contractors are trying to work through those risks.
Okay, thanks, Andrew. And then just to sort of summarize briefly, there are lots of kinds of insurance, certainly lots of kinds of construction insurance. Those include builder's risk insurance that provides first party coverage relating to property under construction or repair. That's usually project specific. And generally coverage ends when the construction is complete and the building is occupied. There's also CGL insurance, which is third-party coverage, and that protects an insured from claims made by third parties arising out of acts and omissions of the insured that result in property damage, bodily injury. And then there's professional liability insurance, which engineers have. We have it as lawyers and architects, and that's carried for liability for errors and omissions. So a key question to ask yourself is, do you have an insured claim? I think sort of coming back to broad first principles, you want to ask yourself, are you a named insured or entitled to the insurance? Certainly you want to avoid generalizing or piggybacking on the outcomes of others' claims. And we say that because, all court decisions, but certainly insurance decisions, are very fact specific, and they're based on the specific wording of that particular policy. And every word matters. And we're going to give you an example of that later in the webinar with respect to a recent decision from the Ontario court. Can you pull up the next slide, please?
And Kathy, before we get too far on this, I wanted to add something and then pass it over to Todd. When you're looking at whether you have an insured claim, whether you have an insurable interest that's protected in the first place, the last point you made was every word matters. And we've got, and I'll turn it over to our insurance expert to talk about that, but every word in the policy matters. And for example, when we're talking about all risk coverage, have you got an extension on that, completed operations? Is there wrap-up liability? These are things that you need to be looking at, that you should be talking to your insurance professional at the project outset to make sure that the risks that you foresee are covered in the first place.
Yeah, and I think the other material point is, you want to be careful you don't go straight to the exclusions, which is what often happens when people look at insurance coverage. You really want to step back and look at the entire piece of it. So you want to start with the coverage grant, then look at the exclusions, and then you want to look at the exceptions to the exclusions. And that's the sort of process and the way to properly read a policy. Sorry, Todd, go ahead.
Yeah, and sorry, and sort of good afternoon, everyone. And all I was going to say is that dealing with a good insurer, they should always be looking at ways for looking at coverage first, as opposed to always just going straight to the exclusions. So typically an all risk policy is exactly what you want to see, subject to the terms and exclusions of the policy. But further to Andrew and Kathy's point below, it's extremely important that all aspects of the policy are being reviewed to ensure that that all coverages being sought is looked after in all different facets of the policy. So that's very important to note.
Okay, and if you could maybe flip to the next slide, Todd, I would like you to address, if you could, a bit how you should make an insurance claim. But just before we do that, I want to also underscore that there's an entire body of case law in Ontario and in the US relating to insurance coverage. And you should always bear in mind that what your construction contract defines as a claim is not necessarily the same as what your insurance policy defines as a claim. The wording can be different, and this is the every word matters piece of it. So if you're claiming under a first party policy, what you want to do is make a demand for coverage under the policy. Whereas if it's a claim against an insured that triggers coverage, that's a third party policy. So I think now that we've kind of laid the fundamentals, Todd, maybe you can tell us a little bit about how an insured should go about making an insurance claim.
Okay, yeah, absolutely. So what's important to note is that for anyone that's on the line today who are policy holders, if you believe or you do have an insurance claim to make, we always recommend engaging your broker, who is your insurance professional, to help you determine what's needed to submit a claim. So under the slide deck, in the presentation that we're looking at right now, we know who the named insured is going to be. You know who it is or who's going to be making a claim under the policy. When the claim is reported, the policy number is always very relevant when reporting the matter, because that allows the insurer to review the correct policy in place. It's also important to outline the coverage period. And one thing that I would say here on points 4, 5, and 6, and to Kathy's point here, is that the more information that is submitted at the onset of the claim really sets the expectations with the insurer of what's being asked. Kathy just spoke about what's the ask. Is it a coverage determination? Are you seeking a defense under the policy? Are you seeking indemnity, which is a loss paid? And so I would not assume that the insurer always knows what you as the policy holder is looking for. The reason why I say that is that there are different aspects of the policy that could trigger coverage, whether it be written right within the insuring agreements or whether it be an extension of coverage. So with the help of your insurance professional, gathering all the information to submitting it to the insurer, it's important to, when a claim is submitted, to outline exactly where within the policy you're seeking coverage. And don't make that assumption that the insurance company is going to automatically assume where you're seeking for it. There has been several times in the past where it hasn't been reported the right way, and insurers will only look under one section of the policy when in fact there was coverage triggered under an extension or a different section of the policy, but because it was never reported in a certain way, was never looked at. So the more information and the more that's requested of what you as a policyholder are seeking from the onset really goes a long way and can really speed up the process of a coverage determination of a claim.
If I could just add a bit to, I think Todd's made some really excellent points, and I just want to make sure that two of those are particularly brought forward and not lost. The first was, and not being a broker, I can say this, absolutely for any significant construction insurance claim we've ever made in this law firm, we have always used the offices of the insurance broker, because they're going to have the historical context under which the policy was written, and they're going to be helping you with that very important point that Todd just made about where the coverage is to be located, whether it's the policy wording and extension and so forth. And getting that assistance is invaluable in my view. So I think that's worth emphasizing.
Okay, thank you, Andrew. And then the last point, and Kathy, please feel free to jump in, is preserve the narrative and documents, because whenever an adjuster is assigned from the insurance company, they will want to see all relevant documents that helps justify the claim being brought forth. You as a policyholder have an obligation and a duty to prove and substantiate your loss. So if you are ever unsure whether or not a document should be submitted or not, again, get the aid of your insurance professional. I'm always of the opinion that too much is never a bad thing. However, if anyone is ever unsure, again, consult with either if you do have a legal team behind you, or if you do have your insurance professional behind you, please get their weigh in as well, because it will go a long way in the process of making sure that a claim does go as smooth as it can. And the most important part as well is designating a point person. There are sometimes many people within an organization that might wear many different hats in order to streamline a process and make it go as efficient as possible. We always recommend that one maximum of 2 people be the point person as the policy holder, that all information can flow through to the insurance company. It may be that the point person is responsible for discussing internally within their organization of what to obtain, but having that one single point of contact again doesn't muddy the waters a lot when it comes to obtaining the information. So that part is very key as well.
Yes, and we're in a sort of new mobile world, and people are all over the place, and they join firms and they leave firms, and I think you can't underscore enough the importance of preserving the narrative in all of the documents. And I think a lot of companies would be well advised to have a central repository of some kind for key project documents that you think you're going to need going forward, and if in doubt, put it in there. Because we've, often encountered situations where, information is stored on, so-and-so's laptop, and then the laptop gets destroyed, or the person leaves the firm, and all of the information, you got to scramble and look at where else it might be. And so if 1, and I agree, Todd, maximum 2, people become the point person, they're responsible for gathering up the narrative, keeping all of that information that's really going to matter to the insurer, of whom the request is being made, and then all of the documents. And Andrew, do you want to expand on the document piece regarding that?
Just the points that are made there, with one additional point, which is that often with these complex claims, expert evidence is required. So you're going to use that to substantiate claims, particularly where there's a root cause analysis at play. And then finally, as you'll hear later in our presentation, whether or not the loss is covered. For risk management purposes, you're going to want to know what the losses were and how to avoid them next time.
Yes, because I think, you're going to want to preserve the evidence of the loss, whether you have an insurance claim or not, because you're going to need evidence of that for some other purpose, for example, litigation, if there's no coverage. Could you go back, Andrew? You want to talk to us a little bit about Force Majeure? It's certainly a timely topic these days.
Sure. I'm going to do it reasonably quickly. I do think that COVID-19 is a force majeure situation, and it's a rare contract, and you'll see some language that follows these slides, where pandemic or epidemic is referenced either as a force majeure event or to have defined consequences. But more importantly, in this situation, everybody's suffering from this same problem, which is increased safety measures on site. You'll see later on that we've referenced the CCA version 4 from mid-April about best practices and protocols for construction sites. You should certainly be following those kinds of protocols. That may be increasing costs, but rather than using force majeure to assert a claim, you can use force majeure to collaboratively work forward, because both sides, both the performing contractor and the paying owner and the trades below the contractor, are going to be incurring costs. So a collaborative approach in a force majeure situation is probably better than a confrontational approach.
So I've been reading, and the details are a little bit vague about this, but a number of the states in the US seem to be on a sort of potential trajectory where there may be some kind of force majeure type declaration, where there's going to be some declaratory piece that COVID-19 is a force majeure for the purposes of, for example, construction contracts, or in particular insurance contracts. And that strikes me as something that's going to happen in the industry a little bit if that happens. And I don't really know what the chances are that may happen in but there certainly seems to be some suggestion that certain states may be seeking to do that.
If I could add to that, certainly some states, not so much declaring it a force majeure, because we've got force majeure, which is between contractors or contractor owner, insurance contract between insurer and insured. But the states are talking about declaring the COVID-19 pandemic to itself an injury to property or a personal injury. So I'm just going to leave aside the personal injury question, because that's complicated. It involves state by state or province by province WSIB exemptions, and it's not really, property claims are really the bulk of what we're sort of addressing. And this move by some of the states to declare COVID-19 an injury to person or property, I think may be problematic. Certainly, it's being opposed by many insurers in the US. There is already declaratory action started, one in Texas, one in New Orleans, dealing with certain business interruption language and policies, but also to get some sort of declaratory relief saying that it's a covered event. We can talk about the impact of that, but there's always the law of unintended consequences. And certainly, I think the insurers will be saying the fact that someone's trying to legislate today backwards to say this was covered then is a pretty clear signal it's not covered. So I'm not sure it's going to help the insurer. And courts do not like to interpret legislation retroactively. So that will be an uphill battle to start with.
And it's certainly not the bargain that the parties entered into. And Todd, I'm sure from the insurance side, you guys have some pretty strong views about that.
Yeah, and right now, what I will tell you is that insurers are monitoring this constantly. Insurers right now at this point haven't come and said much, as this is continuously evolving. We're working with us, being on the broker side, working with all of our different key insurer partners day to day. But right now it's still ongoing and fluid. But that's right now we're still in ongoing discussions with our insurer partners day in and day out.
So thanks for that, Todd. Just pulled up some language. You're going to find this sort of language in post 2013. Everyone who remembers the SARS epidemic of 2013, larger project agreements after 2013 started to see in the force majeure definition the word epidemic, and that's still, I think, I've seen it in a few. It's still not commonplace. So, and of course, force majeure is principally, that's not directed at the insurance contract. It's directed at the performing contract between the contractor and the owner, and then the subcontracts that flow down below it. It's just, to Kathy's point at the outset, read your material, read your insurance policy, read your contracts. Does this qualify as a force majeure event? What does the definition say, and so on?
Okay.
So on that note, if we pull up the entire slide, it might take some time.
Yeah.
Now, thanks so much. First off, now's the time. We're sort of well into it. We're easing up a bit. I want to compliment Todd, because he's the one that could actually get this all working. So who's the oldest person on the panel, right? Me. And confident with technology. That's not true, but it was just a bit beyond me. And of course, number 2 point is lawyer fine print. So, but you have to read that fine print, and this is the fine print that you're going to see in the CCDC2 and following the CCA1, sort of the standard boilerplate construction contract in use across Canada, the standard boilerplate subcontract in use across Canada. Make sure there aren't supplementary conditions that amend this, but this is as close as you're going to see in the standard form to a force majeure, which is a delay event, and it's a delay event where it's consent. There's an extension of time and money, or it's a delay event and there's only an extension of time. And like this COVID situation evolving in real time. We mentioned that there's declaratory lawsuits in New Orleans and Texas, that's the US, but here in Canada, someone may be seeking to interpret these clauses. But my sense is that if you're in a COVID-19 situation, a contractor should probably be entitled to both time and money for the extended durations, because it's really, from my perspective, an owner's risk. Your contract language may change that, supplementary conditions may change that, your force majeure, if it's defined very well, may change that. But, you know, if it's not specifically there, you know, typically, again, it's other legal ways to approach interpretation. It's interpreted against the drafter. These forms are meant to be more a general fair allocation of risk among everyone. And I think we're probably in the clause that makes force majeure or an extension of time and money and extended site duration because of COVID-19, something for which the contractor should be also compensated, not just more time to perform.
Okay, great, thanks. Can we go to the next slide, Todd, and we'll just wrap up delay before we move on to talking about some recent case law.
So on that, just speaking, Ontario has had a reasonably large overhaul of its Construction Act in late 2017. Portions of it came into force immediately, others in July 2018. The last bit, prompt payment and adjudication, just this past fall, October 2019. But in force for a while now is an amendment to the definition of price, which includes direct costs. And direct costs means anything incurred as a result of an extension of the duration of supply of services and materials. In other words, I think there's an argument in Ontario that the legislation is recognizing that contractors should be compensated for extended site overheads and durations. And I think the argument can be made that that would apply in this COVID-19 situation. And I would suggest that's consistent with the allocation of risk in the contracts that the CCA and have promoted. And other industry groups, it's not just constructors, but owner groups and designer groups were involved in that as well.
Okay, can we advance the slide, Todd? And
yeah, so yeah, and I apologize, everyone. Haven't really, sorry about that. Okay, there we go.
Yeah. So hang on to your hats, because for those of you who don't know about this decision, I think there's going to be some things that are going to take you by surprise. It's a recent decision of the Ontario Superior Court of Justice in a matter called MDS and Factory Mutual Insurance Company. And the facts are, you know, detailed and sort of complicated, so I'm just going to try to hit the highlights. But so MDS, the plaintiff, purchased radioisotopes from they were produced at the AECL reactor at Chalk River. And in turn, they got the radioisotopes, processed them for sale, you know, for profit. And they were used for things like cardiac imaging, cancer treatment, and sterilization of medical products. And in this case, there was a shutdown, an unanticipated shutdown due to a heavy water leak at the Chalk River reactor. And that shutdown was supposed to last for 36 hours. It wound up lasting for 15 months. And the heavy water leak didn't cause any physical damage to the reactor. But because of the shutdown, MDS, the plaintiff, was unable to purchase these radioisotopes for resale, and it submitted a claim for loss of profits to its own insurer. And the insurer, Factory Mutual, denied the claim on the basis that the reactor had not sustained any physical damage. So in its statement of claim, MDS argued that it was entitled to coverage for the business interruption losses arising out of the loss or damage to its property, the physical loss. And there was really no issue about damages. It was conceded that they had lost profits. It was conceded what the actual lost profits were. So that was not an issue at the hearing. So in this case, the policy covered the property that was described in the policy. against losses from for all risks of physical loss or damage, except the ones that were excluded. And typically, an insurance contract describes, perils insured, and then it excludes certain risks from coverage, and then you can further have exceptions to the exclusions. So the net effect of that is to put that part of the exclusion back into coverage, the exception to the exclusion. And so for property policies, usual trigger for coverage is the damage to the property that's insured. And that's, often, if not almost always, understood in the sense of physical damage. But here, what MDS said was, look, we're not able to purchase these radios from AECL, and because we couldn't, we suffered a loss of profits, and those are covered under our business interruption coverage in the all risks policy. So that it's an interesting argument, and there were a number of issues that were before the court, including the meaning of the term, physical damage, and whether physical damage was defined narrowly under that particular policy to require actual physical damage, or whether, as MDS argued, physical damage should be defined broadly to include loss of use, not just physical damage, but loss of use of the property that was insured, in this case, the reactor that was shut down.
Right, and Kathy, it's Todd, if I could just jump in as well on that one, because when this ruling first came out, what I could tell you is that we were one of the first organizations to the punch in reaching out to all of our insurance company partners saying, well, this just comes out at, I guess, the best time, because a lot of our clients caught wind of this as well and started asking us, well, does this change things? And so right now, what I can tell you is that, and I might be repeating myself on a different slide, but insurers right now have their legal teams reviewing this. And right now, no one has come out with a blanket statement stating, yes, that this is going to change the landscape of how this is going to be treated. The Insurance Bureau of Canada also came out a couple weeks ago with a document that outlines sort of the, I guess, the different small nuances between this particular case and, what's gone on with the COVID-19 pandemic. So, while I know everyone wants to think that this brings things back in, what I will tell you is that insurers have not come out with a blanket statement saying, yes, this now is going to trigger coverage under our policy. I think what you're going to see moving forward, in order to get the insurers to really look at this, is there sufficient evidence that the premises in question was contaminated by the virus? And I think that's where this is going to start from an insurer standpoint. But with that being said, and I wish we had all the answers right now, but as this is all still fluid in terms of communications and things being reviewed, I think that, it's day by day, things are changing in terms of how everyone's looking at this. So I just wanted to just give those comments.
No, and I think that's a good point, because I think what we're going to see is certainly a risk of generalizations and a risk of, sort of taking this one premise and converting it into something else. And that's why I started by saying, the words matter and the language of the policy matters, because, in this case, okay, so the court looked at the meaning of the term physical damage and whether it should be defined narrowly to require actual physical damage, or whether, as MDS argued, physical damage should be defined broadly to include the loss of use of the property insured. So in the result in this case, the court concluded that this heavy water leak that caused the damage was resulting physical damage. But that, that may not be the case with respect to a different fact pattern and with respect to different policy language. It's just, this is the particular confluence of events and language that resulted in this court decision, which, I can venture to say was probably pretty unexpected. But this is the result of these particular facts and this particular fact pattern, which is not to say that's going to be the correct interpretation for your policy that you may be claiming under, and your particular policy wording.
So if I could just add to that before we get on onto bond claim, I think it's important to hear Todd's point and admonition that the insurers are looking at this closely. They're looking at MDS and its impact. I think one of the more unusual aspects with MDS is the proximity of there was corrosion, there was some physical element to it, but the proximity between that corrosion and the ultimate loss was a little more distant. But the two elements that I think will continue to be triggers for coverage, because most policies are going to have the language direct physical loss or damage, is loss of functionality, which MDS had in spades, because you couldn't use and big economic loss that followed that, but also proximity. And it's those two things together. And other cases where maybe the physical connection isn't quite as strong, but the proximity is closer, or the proximity is very close, but the physical connection is very strong. And in the situation of COVID, I would suggest, like Todd has asked, well, is there evidence that COVID is there on the premises? And I think that's probably, something like that is probably going to be both required by the insurer and probably required by the court, as the court says, we're looking at the loss of functionality. You can't use the site. It had to be clean. But some causation element and some connection with COVID you have to demonstrate evidence of that virus or contamination on site. And then another situation may be, the duration of that loss is not going to be infinite. We know the virus is there, and or at least medical information today is telling us it's 3 or 4 days that it lasts. So, cleaning it for months, you might get a skeptical look or response from your insurer. But at least at the very least, having some evidence that COVID is present and some evidence that it's actually there. I think when you can trace it to a person, that's going to be very helpful to your claim. And where it's just, for example, the threat of COVID may be insufficient to ground a claim, regardless of whether you've suffered some loss.
Yeah, there's risk that people are going to cast the net broadly and use, COVID-19 and use their policy and try to cast things broadly and get things caught within the, coverage grant that wouldn't normally be. So I think probably the takeaway from Todd's information is, don't get sort of a lot of ideas. The insurers are far from any, blanket statements about the meaning of property damage resulting from this MDS decision.
So very quickly on bond claims, those are not the type of, they're not really insurance instruments, they're a performance or surety instrument, but they're not there except to ensure that the principal performs. They're not there as insurance. But where there's extended durations, there could be bond claims because a contractor goes into default or fails to perform, and also deteriorating financial situation may lead to a larger number of bond claims, which is why when you go back to our thoughts on force majeure, where we're dealing with COVID, is we're all in this together and working collaboratively to ensure that your performing contractor and your paying owner can get the project completed is probably your best bet rather than confrontationally. Just on that note, and I just want to speak quickly about insolvencies, and this, more than anything else, is changing day to day. The financial outlook in February, when it was very new, when many world leaders, including our leader to the south, came on site and said on TV to say there's only 15 cases to where we are today, over 1 million worldwide, and many deaths. But the economic disruption, we now have numbers in from Q1, and just this morning, so this post dates the slide up to the date of the slide, which is 1 or 2 days ago. Predictions were ranging for overall for 2020 a 1 to 2% loss in GDP in Canada to 10% loss of GDP. Today's statistics in the Globe and Mail, Q1 has had, now that's not annualized, that's just for Q1, and most of the economists, except for the pessimists, are predicting that at the very least we're going to have a significant rebound in Q3 and certainly Q4. So these are annualized numbers. But today's Globe and Mail, which may have been citing from one of the banks or one of the not insurers, but life insurance, wealth insurance people, that Q2 could see a GDP drop of in the 30% range. So the bottom line of the message is that the sooner we get back to work safely, the better for our economy. That if you're in a situation working collaboratively is probably better than confrontationally. And one of the consequences of economic disruption from an insurance perspective is there's going to be exclusions, more of them. There's going to be more expensive coverage. And I'd like to hear Todd on this because on another webinar I attended recently, and one that I sat on a panel in October of 2019, where the insurer representative said, insurance markets are hardening. I know that renewals for some of the insurances have gone up, and if there are loss experiences across the board, one of the consequences of that may be a hardening of the market, which was already hardening. So I'd like to hear what you think about that, Todd.
Well, this is really, unfortunately, the perfect storm, and that's what we've called it right now. We're certainly in a hard market. We have been in a hard market for quite a while. So, unfortunately, what we're seeing is that before the COVID pandemic hit, is that rates were going up quite substantially, and that is even with no claims experience, just because of where the market was. Unfortunately, when this started to take place, it actually doesn't really help our policyholders in terms of losing revenue with what's taking place, and in addition to a market with rising rates. So we are seeing some insurers giving some credits back at this time to try and help our clients during these tough times. But again, certain markets have already come out and are giving credits to try and aid our clients through these difficult times. But with that being said, you're absolutely right. I mean, I think what we're going to see moving forward, and that's going to be mentioned in another slide, Andrew, is that as we move forward, you're right, we're going to have more exclusions written into some policies with higher rates, and so it's difficult messages that are going to have to be delivered. And I think what's going to have to happen right now is that everyone's going to have to start to get a little bit more creative with their insurance products and figure out the best way to move forward. But again, we're probably going to see what that's going to look like over the next year or so in terms of how that looks.
Okay, thanks, Todd. Want to just sort of continue with that thought about what the marketplace is telling us. Generally, you've touched on it already, but also with respect to the MDS decision.
Yeah, and so again, what I will say is that I've already said that insurers have been hesitant in issuing blanket coverage statements as it relates to coverage, and that's for a few reasons right now. Is because the insurers are not coming out stating that there's coverage or not, because you know, you could have insurers with different types of policy forms, whether that, you know, manuscript wordings and everything is different. So insurers aren't going to come out and give a blanket coverage statement as it relates to particularly business interruption coverage as a result of COVID-19 and businesses being impacted. All insurers' messages across the board is that they're assessing each claim on an individual case-by-case basis, even though the cause of loss may be the same. And if we go back to the MDS matter, again, the only way that a case wouldn't be the same is if there is some substantiating and good supporting evidence that there was a trace of the COVID-19 within the insured premises, right? So insurers are saying, well, we're going to look at every case claim on a case-by-case basis, but in reality, all claims being presented is a loss of business as a result of the COVID-19 pandemic. And so insurers are, I think just taking the politically correct approach at this point. They are looking to issue coverage positions rather promptly, I will say. And the reasons being they're trying to do this is understanding that a lot of commercial entities out there might be seeking federal government funding assistance. And as part of the application process, if they'll probably want to know whether or not there is other available funding to them elsewhere, i.e. being an insurance policy. So they will probably need to see some type of evidence that their coverage is not being afforded under their policy in order to get some type of assistance. And as it relates to the effects of the MDS Factory Mutual Insurance Company ruling, again, we touched on this again, but and the reason why this is still going to take a considerable amount of time to determine is the impact that this could have on the insurance sector as a whole if all insurers agree or it's determined that indemnity needs to be paid. And further to Andrew's point about the hardening of the market, we're already in a hard market as it stands right now. And if it's determined that all policyholders are afforded some indemnity under the policy as a result of this ruling, then the market will be a lot different moving forward because the insurers would be paying out billions of dollars to policyholders. So there's still a lot taking place, and I don't expect this. Don't expect to have answers on how the insurers are going to proceed based on this ruling in the next little while. This is going to take some time. So that is currently what's going on within the landscape of the marketplace from an insurance standpoint.
Yeah, sorry, I didn't before, but when I mentioned that the MDS's losses were sort of agreed upon in terms of quantification, their losses alone were $120 million. That was, agreed upon. So I think as first and foremost, we're probably going to see an appeal of this decision, and secondly, clarification on the part of insurers to say the fact pattern is different, the language is different, all of these things are different, and so don't take this one thing translated into an entitlement to coverage under your particular policy.
And if I could follow that up before we switch the slide, just both as Kathy's reemphasized policy and contract language matters, and just on MDS, and it had been adverted to generally by Todd earlier, there's sublimits often, certainly in your business interruption, often in your builder's all risk policy. Sublimits applied in MDS, and I got the number down. They agreed on losses, but the actual payout was less, but still many millions, I think 12 million. So it probably will be appealed for sure. But it's certainly the broader point that Kathy's brought home is, and Todd's adverted to, and I only have numbers from the US, but in the US, it's known that the monthly business losses are in the range of 380 billion, and on business interruption type losses. Leaving aside the sublimits question, I mean, that would be very significant. And I think that's why To Todd's point, insurers are being careful of not making blanket statements. They're dealing with things as we indicated on a case-by-case basis. And the only practical and recent experience on COVID-19 and a more of a blanket statement are dentists. But dentists had a peculiar policy. It was manuscript, but not all of the endorsements are the same, and the insurers switched over time. But there have been some statements that a good portion of losses are going to be covered. Dentists might be in a different situation because unlike construction, which has been deemed essential, at least in Ontario, it wasn't in Quebec. It's opening in Quebec. It's different across Canada. If you email us, we can give you a spreadsheet that members of the Canadian Bar Association put together that we can send you the link to that shows some of the differences. But the point is, differences matter. Insurers are not going to be making blanket statements. And if all of the losses were covered, as some of the perhaps lawsuits have suggested in the US, it may be catastrophic for the industry that has the unintended consequence of not making anything insurable. And there'll be a real tooth and nail fight, like Kathy says, about coverage where you're talking about billions per month.
And that's a great point. And that's a great point, Andrew. And sorry to interrupt. And that's a great point that you make, because that ties back into your insolvency matter. Is that before the COVID pandemic hit, as I alluded to before, we were already in a hard market. And if you had a claims history, whether it be something on there, or whether it be a class of business that insurers don't want to write anymore, and have trouble finding another class of business, we were seeing some companies have to fold during the hard market before the COVID pandemic. So, Andrew, to your point, if the insurers do pay and this becomes catastrophic, well then from a premium standpoint moving forward, it could be on a full. So I just wanted to mention that. Outcomes. So as we stated, what we're already seeing in the marketplace, to everyone on the line here, is we're starting to see that the majority of these claims are being denied, as there is no direct physical loss or damage written within the policy. So we are already seeing from several of our markets looking at denying claims to that effect, and in where coverage positions have already been outlined to our clients. The majority of our clients or clients in the marketplace know that's what's within the policy, but we're now starting to see official positions come out from the insurers on that front. With respect to indemnity, Andrew and Kathy alluded to this as well. Any indemnity that we are seeing, and it's a small amount, is some limited under an extension of the policy, but they have not been for very big limits. So that's what we're seeing as well. Just it's a throw in within a policy that is helping a policyholder out, but then again, these limits are small, so at the end of the day, it isn't really having a big bearing on a payout. And we're expecting various class action lawsuits by policyholders against insurers stemming from denials of coverage for this. We've already seen a couple started within nationally across the country. And we do get approached from clients asking whether or not they should participate in certain class action lawsuits. So we need to be very careful on how us as an insurance professional we're outlining that. At the end of the day, the recommendation that we are giving everybody is we don't want to tell a client yes or no. I think we tell our clients that they need to do their due diligence as it relates to whatever firm might be putting forth this class action lawsuit, figuring out if it makes sense for them. Is it a law firm that is hand in hand with their philosophy and what they're trying to accomplish? So, but this is not the end of it. And I don't know if Kathy or Andrew, you want to comment anything a little bit about that last point or not. Very
quickly. So on class actions, I'm aware of more in the US than here in Canada. And part of that is because, this is for the lead plaintiff and for the law firm. In Canada, we have a loser pay rules. So claims that don't really have much merit, even if they're class action, and even where you've suffered a loss, but there's no legal merit in the sense that you can't prove liability. You can certainly prove damage. You will have to pay. In the US, they don't have a loser pays ruling or regime, so that most of the time lawsuits, they're just the cost of filing. But in Canada, those can be tens of thousands, hundreds of thousands, and for large enough claims, millions of dollars if they don't have merit. So you want to be thinking carefully about participating. If you're one of a group, likely those are going to be indemnified by the plaintiff's law firm. But I would be careful about participating without, as Todd has said, making sure that your values are being reflected in the claim being advanced. And it may well be. I'm not saying not, but be careful about that.
Thank you, Andrew.
Yeah.
Oh, sorry.
We've touched on this already. I think what we can reasonably expect going forward, I think we're going to see an uptick in claims for sure, an uptick in denials, and the insurers working hard to put some, black lines and hard edges around some of the, more novel and probably more voluminous claims relating to COVID-19, particularly in terms of, as Andrew mentioned before, was the virus actually present at the particular project? Was there the kind of loss like we saw in MDS? I think we're going to see quite a bit of edges, boundaries getting tested that the insurers are going to have to work hard to manage.
Yeah, and I think that we've, and I've got nothing else to add on that front, because I think we have added what to expect moving forward in outcomes. So,
yeah, and I think it's 3 o'clock, so I just had a quick look. I didn't see any questions that popped up. Yeah, Andrew, sorry, I can't see any.
There's 2 questions. I'm going to read them out, and let's go for it. So they are, first, does the government order during the mandatory shutdown automatically override or extend the deadlines in the construction contract, example, delivery, procurement, etc., in Canada? So why don't I just take a crack at that? I actually did an article that I'm happy to share, Kathy and I, in our newsletter, and we've been doing on COVID-19 questions. And I touched on it there, and I can sort of repeat it now. I don't think that the government orders, unless you've been for construction, right? Because, and I'm certainly speaking for Ontario, it might be different in other provinces. That's why we have the chart for other provincial orders. But where you are entitled to continue, and up until recently, it was an in-process performance of a construction contract. I don't think the government orders suspended those timelines. I do think it suspended legal rights associated with those timelines. It practically probably suspended notices of non-payment and adjudication rights for contracts that post-date October 1, 2019. But regular timelines in the construction contract, I think you still have to obey them. It's just you couldn't go to court to enforce someone who didn't. Things like lien rights, which are statutory, those are different. Adjudication, that's statutory. Notices of non-payment, that's statutory. That's in the gray area. Because there'd be no right to enforce it, you probably had to send one, but you couldn't do anything about it if you got it, or you couldn't do anything to force it to happen if you sent it. So I think the better approach, the cautious approach, is to obey your contractual timelines and work collaboratively if you need more time, because you may be entitled under your contract language to extended timelines. The government order itself doesn't, unless you've been ordered not to do anything. If you're in a province, or if you're a construction site in Ontario that didn't have a permit already and isn't an essential service like a infrastructure or water and wastewater situation, and it's just a new permit that postdates April 4th, you probably are shut down by the government orders. But I think you have to look at it on a case-by-case basis. My answer is no. Certainly in Ontario, the government orders, because construction was an essential service, as long as you met the requirements I just outlined, and you have to obey your contract guidelines and mandated timelines, because subject to your right to claim extensions under the contract. The second question, for a force majeure clause, does biological contamination refer to? What does biological contamination refer to? Can this be referenced against the pandemic? And I've seen language, I think this is a US clause, and I don't know if Todd, you're able to jump in, but there could be, if you've got a pollution exclusion, you can have an exception to the exclusion dealing with virus, but you're going to have sublimits. And this was discussed in a little more detail with my American colleagues in another webinar, where those sublimits are going to be, relatively small. But generally, if you've referenced in your force majeure biological contamination as an event, I think there's a good argument that that includes COVID-19, because biological event is something broader than virus, bacteria. It seems to me to be both. I don't know, Todd, have you had that issue come up yet?
No, we haven't had it come up. But then again, what's important to note is that, again, going back to the wording of the policy, is that under pollution event or biological agent, it'll be very detailed on what that does entail. But no, it has not come up yet as a result of this. I expect that it will, but as of right now, it is not.
So the last question, and then I think we've got to wrap it up, is based on the CCA wording referenced earlier, do you think contractors would be within their rights to pass on the costs of COVID compliance to the owners of construction projects? And I think it depends on whether you're ordered to do it or whether it's a best practice to do it. Because if it's a best practice to do it, I think you're probably going to find, not so much in the CCDC or CCA general terms and conditions or even special terms and conditions, but in the specifications that are part of your job, that being responsible for health and safety requires best practices. And I think you could make an argument that it was included, but I feel less strongly about generally extended durations, which I feel stronger about, and specifics with respect to health and safety on the workplace may be caught with other more specific language that isn't in the contract. I don't want to say no, it couldn't be claimed. It might be claimable, but I'd be cautious that it was an allocated risk, probably specifically in your agreement with respect to what you had to do for health and safety, following best practices.
So we have one last question, and people are welcome to introduce themselves. We didn't want to go over time, but this last question I think is probably worth addressing. And the question is, based on the CCA wording you referenced, do you think contractors would be within their rights to pass on the costs of COVID compliance to the owners of construction projects? That's a loaded question, and you're really going to have to look at your agreement very, very carefully. Apply them. The first analysis should always be, what does your contract language say? Does it let you do that? That's going to be a very complicated argument to make, I think. I don't know, Andrew, what's your view?
I agree with that. And I was just saying that I think the general language, I feel stronger about extended durations and increased performance cost as a consequence of COVID than specific health and safety best practice, which you may have agreed elsewhere, both in the CCDC contract, but more importantly in the real nitty-gritty of the detailed terms and conditions, which always accompany any contract of substance, that requires you to follow best practice. So I'm not saying no, but I think that's a bit more of a tough sell, and you need to look specifically at what the other specific things you've agreed to do are with respect to health and safety, and typically that's going to be the contractor, because you're going to be, at least in Ontario, the constructor under your notice of project.
Right, and it's it's just the cost of the sort of extra hand sanitizing stations and the extra people. It's examples that I confess I hadn't thought about, but you know, the external elevators, the cage elevators that go up the outside of the building, you can take, you know, 15 people and cram them in there, and you know what's the cost and what's the time extension for if you can only put 2 or 3 people in there and you've got to make 20 trips instead of just 1 trip. You know, all of that slows everything down. So I'm with you on the extension of time. I'm not so sure about the increased costs.
Yeah, Todd?
Yeah, we are out of time actually. So I think for those of you who actually joined us, thank you so much. Thank you, Andrew, Kathy, and Todd, for your valuable insights. There will be a recording of this presentation that we will send the link to. I'm not sure, Kathy and Andrew and Todd, I believe the presentation can be sent out as well. I'll leave that up to you. So thank you once again for joining us and for presenting this webinar on behalf of CCA. Our 7th webinar on the series will be next Thursday, May 7th, 2 p.m. Eastern Daylight Time, on financing programs and financial recovery, cash flow considerations for construction. So join us then. Enjoy the rest of your day. And thank you once again to all of you.
Thanks, Kenny.
Thank you.
Thank you.